morning. Welcome to the E3 Weekly Market Report. Exports have just come out. Let's go to those right now and see what they show. Cotton sales. We were expecting large cancellations because this reflects not just now but a week ago, so we have seen those. Net sales of 16,200 running bales, a marketing year low. We're down 87% from the previous week and 88% under the 4-week average. Turkey took 10,800, Brazil took 8,800, Vietnam took 8,500. And then we've got cancellations. India canceled 11,500, Bangladesh canceled 4,300. Net sales for new crop 2017-2018 were pretty large numbers, 236,200. Vietnam took 125,000. Indonesia 42,000. China 26,400. Shipments of 332,800. Still good there. We have backed off in the cotton. Cotton was down 19 before this report. Cotton is right now down 32 in July, down 31 in December. So that's the reaction so far. Has been a negative one. I have to say this was a much anticipated small number. I don't think anyone in the cotton industry, there was no one that did not know this was going to happen. Let's look at soybeans. Net sales of 472,700, up 33% from the previous week, up 9% from the 4-week average. Unknown destinations took 148,500. China took 130,000 metric tons. Pakistan took 65,000 metric tons. Now, soybeans in old crop were up 2.5. Right now, they're up 3. New crop beans were up 0.5 just before the report. Right now, new crop beans are up 1.5 pennies. So that market firming up. Corn. Net sales in corn of 457,200. That's down 35% from the previous week and down 33% from the 4-week average. Japan took 227,400. Mexico took 68,600. Taiwan took 67,000 metric tons. Corn was just before the report up 0.5 in July corn. July corn is up 1 right now. December corn was up 1 before the report. Now December corn is unchanged, up 1. Let's look at wheat. Net sales of 201,900 metric tons, down 19% from the previous week, but up 49% from the 4-week average. Mexico took 119,500. Venezuela took 60,000 metric tons. Japan took 56,300 metric tons in wheat. And wheat, just before the report, was up 1.5. Right now, it's up 2. So that market's firmed up. So mostly firming up in the grains. Cotton has been selling off, although as I look across now at this market, we're actually firming up. As I mentioned, July cotton was down 19 before the report. It did dip and get down 35, but now it's up 18 in the July. December is down 2. So let's talk about what's been going on recently in cotton. Looking back over the last week and a half, over the last 7 days, July cotton has dropped a total of 1,008 points, so about 10 full cents we've dropped in the market. December cotton over the last week and a half has dropped 293 points. Of course, for that to happen, the market had to rally that amount, and what it took to go up, as far as how long it took, about 3 or 4 days. In about 3 to 4 days, it's erased it. So the question is, why the rally? We took out some technical levels to the upside. Speculators started to buy the market. We started seeing short covering. There was somewhat of a panic in the market. But then as we see, the market erased all that. We saw some very good trade selling at those higher levels, and there was talk that we would see some deliveries against certified stock. And so we just saw a bubble in the market. And now we've erased it, basically. So what now? Well, looking at what to expect the market to do, right now July cotton is trading, up 52 at 78.02 in the July. December's up about 5 at 73.18. So what to expect now? Well, looking for a trading range in July. We could trade back up to 81 cents. Right now we are right at 78 cents. Uh, and the low maybe would be down at 76.50. So 76.50 to 81 cents is what analysts have talked about as a trading range for July cotton. What about December cotton? December cotton's got a tighter range, maybe as low as 72, maybe as high as 75. Here's a key point. It has to do with December cotton. It's very unlikely, with things as tight as they are in cash, that December cotton or new crop cotton is going to be able, even with a lot of acres planted worldwide in cotton, it's unlikely that this market's going to be able to make substantial uh, sell-off because of those high acres until we get over to a point, perhaps approaching August, when the market feels like it's got a crop and it has confidence that it's going to be a certain size crop. So until then, we're probably going to be confined with a range over the next, say, 2 months, confined within a range in this market, down maybe towards 72, maybe a little lower, but up towards 74 and a half, 75, 75 and a half, and it just appears. Now, after that, if we get into August and we see we've got big acres and a crop in very good shape, this market's susceptible to a significant sell-off. So be aware of that. Take advantage of that on rallies. And let's just talk about that. What to do? Well, for those of you that have not priced any cotton or booked any cotton or hedged any cotton, any trip back up towards 74 and a half to 75 basis to December, and you might want to use the March contract if you're tying it to that. Take advantage of that. This market has given us many opportunities to do hedging. We're hoping you've taken advantage of that. But if you have not, you could get another opportunity, so take advantage of it now. Also, the seasonal in cotton, normally, and look, this might not be a normal year, but the normal seasonal is to see a bounce into mid-June. Typically, it's because of weather. There's always a weather problem somewhere. It causes some nervousness, and the market has a tendency to bounce going into that. So whether this is a year that does that or not, we'll wait and see on that. Let's look at grain. All these markets, corn, soybeans, and wheat, we have been selling off here recently. The reason for that, planning and emergence numbers that come out each Monday have been very good. We're on schedule or ahead of schedule. We also have been dealing with large carryover of these crops. And the recent developments in South America, specifically in Brazil, of a political nature have been very negative. The market took it in a negative way. What to expect? Well, we expect occasional bounces in this market in grain and oilseed. And as far as what to do to take advantage of these bounces, you want to be able to book, price, hedge. July soybeans right now are trading at 951 3/4. A move back toward 980 to 990 would be a place to consider to do selling there if you need to sell some of that crop. November soybeans are right now trading at 949 1/4. A move back toward 980 would be a good time to be considering doing some pricing there. July corn right now is trading at 372 1/4. A move back in July corn toward 380 to 390 would be a place that we'll probably run into resistance. December corn is trading right now at 390 3/4. A move back toward 395 to $4 in December corn would be a place to consider some hedging. What about July wheat? July wheat trading up to 434 1/2. A bounce back toward 450 in that area, and you could see an opportunity to do some things. Now, what are the seasonals in these markets? Corn and beans see a similar seasonal to cotton. A bounce into mid-June is possible. So if you're looking for a time frame, that could be it to get up to these levels. The seasonal in wheat, typically we're moving down now, and we move down into late June, early July. So just be aware of that. The seasonal tendency for wheat's to move down. So look, that's it. Cotton up 24 right now in July. December's up 2. That market is firmed up. Soybeans have firmed up. Before the report, they were up 2.5. Now they're up 3.5. Corn right now is up 1. It's pretty close to where it was before the report. Wheat's up 1.5. It's pretty close to where it was before the report. That's it. Thanks for being with us for the E3 Weekly Market Report. We'll talk to you later.